Milan. In classwork 15, we are given Bradley Bros Limited, which is a company which specializes in water polo equipment and kit. They supply all areas of South Africa. Their financial year ends on the 30th of June 2021. It has been a tough year for the company, and so directors have decided not to declare any dividends at the end of the financial year. Now, according to the information that we're given, land and buildings for last year was 1 million, and this year it's 1.85 million. Vehicles, they gave us the cost of vehicles at the beginning of the year were 335,000, and accumulated depreciation at the beginning of the year was 163,480. And they gave us accumulated depreciation, which is way less than what we had at the beginning of the year, which tells you that we actually sold something, because that's the only way accumulated depreciation can decrease. Okay, it can only decrease if we sold something. And to understand, to have a thorough understanding on that, please check out the videos on tangible assets, where I explained as to what affects accumulated depreciation. Now, we've got non-current assets. The only depreciable non-current asset the business owns is a delivery van, which was bought on the 1st of July 2017. That really doesn't matter because they've given us accumulated depreciation at the beginning of the year. So we don't really need that information. Had we not been given accumulated depreciation at the beginning of the year, then that information was going to be vital. On 1 January 2021, Bradley Bros Limited decided to sell this delivery vehicle at book value, originally bought for 335,000, which had needed constant maintenance since January 2021. So let's see, how long have we had this vehicle for in the current financial year? We've had it for July 2020, August, September, October, November, December. We had it for 6 months. So that accumulated depreciation of 163,480 is at the beginning of the year. We still need to add depreciation for the current year, which is for 6 months. But now we don't know how to calculate depreciation for the current year. Let's read further. And then they tell you that on the 1st of July 2020, accumulated depreciation amounted to 163,480, which is the beginning of the financial year, obviously. Depreciation is calculated at 20% on carrying value. So we need carrying value at the beginning of the year for us to calculate depreciation for those 6 months. Carrying value is the same as book value, is the same as diminishing balance method. And then they told us that a new vehicle was purchased. But now the problem is that we don't know what the cost price of this new vehicle is, which was purchased on the 1st of June 2021. This vehicle's depreciation is calculated at a different rate, so we can't use that 20% on carrying value. But now they said on the 30th of June 2021, it had depreciated by 13,300. So that 13,300 is the depreciation of this new vehicle, because remember, we only have one depreciable asset. Let's see how we do this, by the way. Let's go through the solutions. For land and buildings, we had R1 million worth of land and buildings at the beginning of the year. At the end of the year, we have 1,000,085 of land and buildings. We do not depreciate land and buildings. Obviously, it went up. Nothing was said about land and buildings being sold, so that's why we have disposals at carrying value, which is 0. For land and buildings, it will be at cost. When you use the reverse operation, you'll realize that additions of land and buildings will be 850,000. And that represents land and buildings purchased for the current year, and that will be 850,000. For vehicles, we were not given carrying value. The reason why we need to use the carrying value method and not the cost price method is because we were given depreciation, we were given carrying value in essence, and I will show you why I'm saying we were given carrying value. We were not given, well, we were given actually the cost price of the vehicle that was sold, but we were not given the cost price of the vehicle that was purchased. For now, I'm just going to use the carrying value. So I will need to calculate carrying value at the beginning of the financial year. In my mind right now, I'm trying to figure out if it was possible for us to calculate the cost of the additional vehicle that was purchased. No, we wouldn't be able to do that because we were not given the carrying value at the end of, the cost price at the end of the year, which obviously in this case was going to give it away in any way. So that's why we have no other choice but to use the carrying value method. So the cost at the beginning of the year was, obviously the cost will always be the same. It will be 335,000. Accumulated depreciation at the beginning of the year was 163,480. The carrying value at the beginning of the year will be 171,520. And when you watch the video on tangible asset, you will realize how I emphasize calculating carrying value at the beginning of the year and how important it is. Because even if we do not need it, even if we were depreciating our asset using the cost price method, we will still need to calculate carrying value at the beginning of the year because that guides us and informs us as to how much of the depreciation can we recognize in the current financial year. Remember, the current year's financial depreciation may not exceed the carrying value of the year. So this calculation is vital. All right. And our carrying value will be 171,520 at the beginning of the year. The carrying value of this asset that was sold, we now need to calculate the carrying value of this asset that was sold. But the problem is we don't know how much the carrying value was. We know the carrying value at the beginning of the year, but we don't know the carrying value as at the date of the sale. So that's why we have to quickly do this calculation here. And our accumulated depreciation will be 186.32. You're probably wondering, where did we get that 186.32? And that comes from the fact that this vehicle was depreciated for 6 months. So you will simply take that 171,520 multiplied by 20% and multiplied by 0.5, which is the same as 6 over 12, and it will give you a depreciation for the current year, which is 17,000. I forgot the value. And then you add it with accumulated depreciation at the beginning of the year. Let me just show you a thorough calculation on that. Now we're going to first start calculating depreciation of the current year. And obviously this asset was only used for 6 months. So we're going to use the carrying value at the beginning of the year to calculate current year's depreciation, which will give us 17,152. And then we're going to add it with the accumulated depreciation we had at the beginning of the year to get the accumulated depreciation of this asset as at the date of the sale, which in this case, when you add the two, 17,152 plus 163,480, it'll give us 180,632. Take the cost price, which is 335,000 minus accumulated depreciation of 180,632. It'll give you a carrying value of 154,368, and that's what you will put in there as the carrying value of the asset sold. Okay. Now, please note that we were given the depreciation of the asset for the current year, especially the new asset that was purchased. Now, for us to calculate the depreciation on that, we wouldn't be able to because we were not given thorough details. We don't have the cost price. We don't have the depreciation method because the depreciation, a different depreciation rate was used. Now, because it was given to us, we will just add it with the depreciation of the old vehicles, and that will give us our depreciation for the current year, which is 30,452. Okay, but note that we're still missing carrying value at the end of the financial year, and we are also missing what was purchased. Question is, how do we calculate the value of the asset that was purchased? For us to be able to get the total tangible assets that we purchased for the year. Note that whatever we have there is what we will show on the face of your cash flow statement. The problem is that we have two question marks here. One question mark has to be solved. Okay. And for us to solve one question mark there, additions at cost question mark is quite difficult. However, we can calculate carrying value at the end of the year. But how do we calculate carrying value when we don't have additions at the beginning of the financial year? Now, that's why I said that there are two unknowns, additions at cost and carrying value at the end of the financial year. Additions cannot be calculated using this table unless we are giving carrying value at the end of the year, which is given in the answer book at 167,500. So that was given to us in the answer book. It was not there in the question paper. Now, by having the carrying value at the end of the year, that enables us to calculate the cost price of the new asset that was purchased, which is 180,800. And obviously, that is the cost price if you were to subtract the cost price, obviously, from our tangible assets purchase, because it results in a cash outflow. And ultimately, we will have 850,000 plus 180,800, and that will give us negative 1,030,800, which is a total cash outflow that went out for the purchase of tangible assets. And you can prove this by calculating carrying value at the end of the year, which is 167,500. All right. In the next video, we will simply be preparing the full cash flow statement. Okay, you can do it if you want to, and this is what you need to prepare. A full cash flow statement using all this information. You first prepare this. Then that. Dividends paid. Retained income. We need retained income to calculate dividends on ordinary shares. We also need taxation paid. Then tangible assets purchased. That is the calculation to this tangible asset purchased. And then you'll have to use all that information to prepare the full statement of cash flow. Thank you for watching. I really appreciate it.